Well, good evening, everyone. Welcome back to the channel. So in this video, I'm going to try to do my best to address some questions and really good comments that I've gotten from some of you on my dividend videos. And just going to try to do this off the cuff here. So what I'm going to start out doing is looking at some of the other funds that have popped up a bunch in the comment section because some of the questions that you all have asked are actually really good questions, and I don't know if I can just answer them off the cuff without some decent prep work, but I'll try to at least do that in another video. As far as I got one on a video I did asking for a comparison between partial dividend reinvestment of QYLD and JEPI with no drip. I'm not sure what that means because if you're investing without doing the drip, I'm not sure on that. Maybe maybe you could clarify that if you want to. I think the comment came in about 10 days ago. But I mean, I've done that basically with the side-by-side comparison. I've done those in other videos where I've shown QYLD, JEPI, JEPQ, and it's like crazy returns. They're like 4 or 5xing basically. But I'm not sure from this commenter. I'm not sure how I would do a comparison of a partial dividend reinvestment without the drip, because the drip is the dividend reinvestment basically. The other ones I've gotten, there's some other funds that I've had requested over and over. I think SVOL is one, so I'll look at that and give you my expert opinion as an online financial guru. I'll give you my expert opinion on that one. So far from what I see, I like the dividend on it. The yield's 16.22%, and it's at a good price. But let's look at some of the more fundamental things here. Historical price, from what I see here, this looks fairly new. This is May 2021. So this is a little over a year old, almost a year and a half. It's been dropping. So it's a Simplified Volatility Premium ETF, SVOL. So expense ratio of 0.54, not the lowest, but not the highest. Year to date down 13%, which is less than a lot of them. Let's see how it did in the bull market. Well, we don't have much data on that because it kind of looks like it started at the end of the bull market. Let's see what else we got here. Fund summary. In pursuing its investment objective, the fund primarily purchases or sells futures contracts. Ooh, that sounds interesting. Now, I want to get into futures trading, but I haven't had time to really research it yet. But one thing I find really interesting, comparing futures trading to options trading, there's no theta decay in futures trading, from what I understand. So that alone is awesome. So I think there's a huge opportunity there. But I need to be at a point where I can just sit like in front of a computer screen in the morning and just do nothing but that. I've got too many distractions right now to be able to full-time trade. So that, and obviously starting a new job and stuff, that's not going to happen in the near future, which maybe that's a good thing, because a year ago, the way the market was going, I was actually looking at retiring early, and that would have been a disastrous move in this market. So, everything kind of works out for a reason. Okay. So primary purchase or sells futures contracts, call options, and put options on VIX or VIX futures. So yeah, it's trading volatility basically. The fund will hold cash, cash-like instruments, or high-quality short-term fixed income securities. Up to 20% of the fund's net assets will be subject to the fund's option overlay to mitigate against extreme volatility. So I like that one. I may actually have to add that one to the portfolio. Yeah, that one gets a thumbs up from me. Let's see what the next one is here. Let's see here. Devo, I've talked about Devo before. A commenter pointed out they didn't cut the dividend, as I mentioned. They started off paying quarterly and then changed to monthly. That's why it went from 39 cents to 13 cents. That's fine. That's not one of my top ones anyway. And I'm not going to, just as a courtesy, I'm not going to read names. I mean, I don't know. Maybe you all want the publicity. Next time I can, I guess. Let's see. SVOL has been mentioned already. This commenter thinks should be in the allocation of ETF holdings to give off high yield when others are not. True. Like I said, I may add this one to mine. Let's see. This commenter 2 weeks ago. Let's see. Yeah, QYLD. I talk about this one a lot. And the funny thing, like the title of this video, I've kind of got a generic title, but I added QYLD and JEPQ because those two funds, just putting those in the title, that will get like, that will 10x the views, compared to other videos. Like if I talk about Credit Suisse and credit default swaps and whatnot, gets nothing. But I talk about QYLD, man, lots of views. So, that's part of the trick as a YouTuber, whatever's trending online that, goes in line with the niche of this channel. So let's see here. Okay, QYLD has gone down in price every year since inception. Agreed on that. And it's during the biggest bull market of all time. Agreed. That's definitely a negative. This person's not a fan. What ETFs are going to grow their stock price at least 50% of the S&P 500 during a bull market and throw off over 10% yield? Yeah, I mean, don't we all want that? Can we set up a rotation of ETFs? Yeah, I think, honestly, I think we're all looking for that, including me. I mean, the ones I'm mentioning would be in that rotation. But like I said, QYLD, and I just did a video of that. Actually, I live streamed out on my patio during the hurricane we just had here. And like I said, I'm going to hold it at least until the end of the year, just because I like the payout. So I'm kind of stubborn on that. But it's a small percentage of the portfolio, so I'm not too worried about it overall. Let's see. Yeah, I mean, balancing out of different ETFs. Yeah, I'm all for that. I may balance out of QYLD, take a loss, and then get into something else. SCHD, I've done a video on already. Oh, here's one, REGL. I haven't talked about this one, but there's a lot of these. And I think I kind of discover a new one just about every week. REGL. What is that, like Regal? No. Pro shares. Let's see. Oh, mid cap. I usually stay away from mid cap just because it's kind of like, I'm not a middle of the road, kind of person. It's like either large cap or small cap for me. But it doesn't mean mid cap's bad. But okay, pro shares, S&P, mid cap, 400 dividend aristocrats ETF. The yield 2.5%. It depends on how often it's paid out. Year to date total return is not down as much as SVOL, which we just looked at. Expense ratio is a little bit lower. I'm not liking the yield though, or the price, because you can get a better yield for cheaper just based on what I'm seeing here on the surface. This has been around since 2015. It's gone up over time, and it hasn't fallen that much since the end of the bull market. Let's look at, let's see the frequency on the dividend here. So let's see. Frequency, Yahoo, come on. Ooh, what did I stumble on here? Options, I don't want options. Don't want that. Historical data, come on. Okay. See, the screen moves around on me as I'm trying to click this and this thing moves around. Okay, let's try again here. Historical data, don't move on me. Dividends only. Oh, this one might have a capital gain distribution too. So let's see. Oh, it pays quarterly, but 38 cents a quarter on $67. I don't know. Let's go back further. Let's go back to the maximum. March, September. Yeah, it looks like it's always paid quarterly. Let's see, because I noticed a tab for capital gain distribution. Let's see. Capital gain. No capital gain. I like how I get ads for internet when I'm my bandwidth is getting tested a little bit. It's funny. Stock splits, there wouldn't be any of that, would there? No. All right, so let's see the next one in the comments here. SCHY. That's a new one I haven't looked at. SCHY. Let's see. Schwab International. Me personally, I stay away from international. Now, I'm not saying you should follow everything I do. I mean, I wouldn't say I'm like a Warren Buffett, but Me personally, I stick to like domestic, like US based. And my theory, I don't know if I've ever actually gotten into this, but my whole theory, and some of you may disagree, some of you may adamantly disagree, is that the US multinational corporation is just that. It's a multinational corporation. So my belief is that you get international diversification by investing in US companies because it's a global economy. And domestic companies do so much international business. They have operations all over the world. So the way I look at it, they operate in so many different countries. You get international exposure just based on that. I mean, look at companies like McDonald's. They're all over the world. I mean, you can even take like Amazon. You can take I mean anything you can think of as far as a big large cap or mega cap. Look at Apple. I mean, look, Apple produces most of their stuff in China. Look at Microsoft. Look at Nvidia, especially. I mean, a lot of these companies have a lot of operations in China, Southeast Asia, and around the world. So that's kind of my thought process there as far as international diversification. Year to date total return, this one's gotten beat up pretty good. Year to date is down 20.23%. Expense ratio is pretty cheap. 2.91% dividend yield doesn't get me too excited. This one also goes back to 2021. So it hasn't dropped. It's probably dropped 25% overall. And from what I'm seeing here, most of the drop came this year. So let's look at the frequency of the dividend. And then I'll try to queue up my next one while I'm pulling this up. Dividends only. Maximum, which it's only going to be a year, probably a year and a half. December. Ooh, they missed. Maybe they're paying bi-yearly. But yeah, that one, 1 cent. That's not going to change the world. So yeah, that one so far out of the ones I've talked about, I think I've only really added one to the list so far. Let's see, what else do we have here? Devo, another comment about that. And I'm just kind of randomly going through looking for patterns that I see in the comments. Let's see, here's another frequent commenter. Okay, here's a couple more. RA and CHW. So let me look at those. RA. Brookfield Real Assets Income Fund. Let's see. Ooh, another good find. Yeah, this person, and I'm sure you know who you are. You comment on my channel a lot. You tend to find really good funds. 13.27%. Well, I'm not saying good funds. I'm just saying the dividend looks enticing. Whether it's good or not is in the eyes of the beholder, right? Okay, 17.96%. PE ratio seem. Is it an ETF or is it? Oh, is this a REIT? Let me read the description here. Where is it? Don't care about that. Closed-end fixed income mutual fund. Mutual funds I'm kind of iffy about for various reasons. I actually did a 30-minute video on mutual funds like back 6 months ago or more. Let's see. Brookfield Investment Management. Fund is co-managed, blah, blah, blah. Fund primarily invests in securities, other instruments of companies, which include real estate, infrastructure, natural resources. Let's see here. Expense ratio. It's not showing, but it's a mutual fund. You know how they have hidden costs and stuff. Let's see how far it goes back. 2016. So it's dropped like $5. It seems like this behaves kind of like a REIT. REITs tend to pay high dividends, but again, the dividend sometimes can be so high that it actually cannibalizes the value of the fund. So that's kind of the drawback with that. So I'm kind of, oh, well, let me look first at the frequency of the dividend here. Frequency of the dividend. Let's see. Come on, Yahoo. One day when I, get to be a little more serious as a channel, I guess maybe I'll use a better service than Yahoo. Well, I did pull up a Wall Street Journal article from my last video. Let's see. Oh, this pays monthly. See, I like these. See, if you can get a good monthly dividend payment coming in, that's the idea. If you're trying to get dividend income going, passive income. I mean, I like that at 20 cents a month. I mean, that's pretty good for a price of $17. I mean, that's, you know, that's not bad. I mean, I definitely would consider that one for sure. And then let's see, next one, CHW. CHW. Kalamos Global Dynamic Income Fund. $6.08. Ooh, another 13.84%. I like it. Great finds. Market cap 388 million. If we hit the lottery, we could buy it, or maybe not. Goes back to 2007. It's fallen about $5 a share since 2021, but what hasn't fallen, right? Let me look at the dividend again. Frequency of payment. And see, the thing I try to watch, I don't necessarily want the fund to just drop as it pays a dividend. Like I said, I want to, you know, I mean, you want the best of both worlds. Ideally, you want to get price appreciation along with the dividend if you can. Which, when you get really good stocks that pay good dividends, you can do that. It's completely doable. So let's see here. How am I doing? Okay. 7 cents a month. Okay, not bad. Not bad. Doesn't look like it's, let's see, February, March, April, May, June. Oh, it paid. I see. The January one was December 30th. Okay. So it's CHW. GOF, I've discussed before, but I like GOF too. I'll go ahead and pull it up here because it's got a pretty good dividend, but it's got a high expense ratio. The Guggenheim Strategic Opportunities Fund, that is 14%. So this is probably, the fund is probably dropped in price, which is why the dividend's probably a bit higher. So let's see. Year to date, let's see. Yeah, see, it's dropped since August. It's dropped like $1.50. So yeah, the dividend's higher. That one is not bad. I think the expense ratio is a little high on it, even though Yahoo doesn't show it here. I'm not going to waste time Googling it, but I did Google it before. So let's see. What else do I have here? JEPI, JEPQ, I've talked about both of those a lot. I'm not going to go over those now. Oh, the QQQs, that's just, you know, that's really not a bad one. That's the NASDAQ. Pull that one up. It's an Invesco fund, but it's like indexed for, you know, the NASDAQ. So that could, I'm sure it's gotten beat up a lot this year. Yes, see the 52-week range, $408. Yeah, 30% because the NASDAQ's been hammered. So, you know, that might be a good buy. I mean, if you're thinking 2 years out, I think the market's going to recover once the Fed starts lowering interest rates again. The Qs could be great to get into. And then let's see here. VOO. Let's look that one up. It's just the Vanguard 500. Yeah, Vanguard. See, it's like any, you know, you've got Fidelity funds, you've got Vanguard. I mean, you've got Goldman Sachs, you've got JP Morgan, you've got, like we just looked at, Invesco. I mean, I'm not really partial to any company in particular, but so this is probably an S&P index fund, which most 401ks offer that. That's what I do in mine. I do S&P 500. I do large cap. I do my company's stock. I do, well, I did do a small cap, but who knows, I may get out of it. Everything's down this year, but that's what the 5 years that I did the best, when I was averaging at like 30% returns. I did large cap. I did large cap growth in particular. S&P 500. I did my company's stock. I think I was in really 3 funds because I don't want like 10 different funds and different sectors and all that. I'm not sold on the whole diversification and portfolio diversification. The way I look at it, when the market's down, you're going to be down to some degree. And when it's up, you're going to be up to some degree. You want to capture the most of the upside that you can and obviously minimize the downside. That's the trick. But the more aggressive you are, the more of the ups you're going to capture, but also the more of the downs you're going to capture. But when you're dollar cost averaging, you're buying in to those downs, and then, you know, you're buying in more shares. And then as it comes up, it ends up working out better or averaging out. So like I said, I mean, I was doing great the last 5 years with that approach. Let's see if we can squeeze any others in here. TLTW. Dang, I'm gonna have to go back and watch this myself so that I can. There's so many of these funds. I need to actually write notes on all of these. Treasury bond, iShares, 20+ year Treasury bond buy right strategy ETF bonds. You know, it's funny. I did say I was going to talk more about bonds, and I actually I actually bit the bullet on the I series bonds. There's an app called Yada that I actually, funny enough, I found it by other YouTubers being sponsored by them. So Yada, you're more than welcome to sponsor me too. You know, I know you've sponsored bigger YouTubers, but I'm kind of pumping you, I guess, in a way. Well, not pumping, but I'm just saying I use your platform. So I did the $500 thing that Yada is offering, and I got some I series bonds. So I'll get the 9% return that it's offering, which is like $45 on $500. So still, I mean, it's a low amount, but nice return. It's nice to have something guaranteed in this market. But anyway, so this one, expense ratio 35%. I'm not seeing a yield. Looks like it's down. Maybe the data here is not quite. Let me look at historical data. Maybe this will pay a dividend. Maybe I can look at this again in another month or so. Dividends, let's see. Dividends, not options. Dividends, come on. Oh, the futures are way up tomorrow. I wonder what's driving that. Dividends. It paid a 55-cent dividend in the month of September, but do we know, is that going to be monthly? Is it going to be quarterly or what? Let's see. 55 out of 35.74. So that's like 1.5% monthly. If that's monthly, that would be an 18% payout. So that could be a good one if it's going to be monthly. We'll see. Let's see if there's anything else we can cover. I already talked about SVOL, RA, CHW. I think for now, that's going to be all I cover. Some of these more detailed scenarios I'll look into in some other videos. Let's see. One comment that I got. Distributed. Oh, never mind. That's not important. It's funny. I've gotten comments in other languages too, but you can just translate it and respond in that language. Oh, all right. One more, and then we'll call it a day here. QDIV. I think this one's popular. This is part of the Global X family. 2.83%. Not sure about that one. And see, as soon as you search for one, they've got all of these. See how I get ads for it? Like this PAVE, Infrastructure Development ETF, PAVE, get it? Haha, clever. This one's down. It's paying a 2.82%, 2.83% dividend. So I'm going to ignore that for now. And I think with that, let me go back to the stream here and see if I've gotten any. Oh, no viewers. I have been getting a few live viewers, but this has been kind of long-winded. But with that being said, I just wanted to address some of the comments I've gotten over time and look up some of the funds I haven't talked about. So hope you enjoyed that. Please remember to like, comment, and subscribe. Keep an eye out for my next videos. Thanks so much for tuning in. Take care.